So the 50-week moving average, the simple moving average, and the 100-week simple moving average have just crossed. What does that mean? Well, to find out, we can look back at the history and just see what's happened all the other times the 50-week has moved below the 100-week simple moving average. We can see it happened on the 10th of July, so just coming up for about a week ago now. And what we've done so far is, it's been like a 5% rise, which is nothing to get excited about in the world of crypto and Bitcoin. But it's better than a 5% drop, I suppose. So that's what's happened so far. Not really a lot. We're in a slight uptrend. But if we go back to the last time we see these two averages cross, or at least the 50-week cross below the 100-week, we can see that most of the bear market had already happened. Most of the gains have been given back, and the majority of the bear market was over by the time these two averages, or by the time the 50-week crossed below the 100-week. So I actually did it right on this massive peak where there was a increase from just under 19k to 22.5. But if you sort of disregard that volatility, you can see that after, what followed was general consolidation around those levels, and then a small rise before the final capitulation of the bear market. So that took about, if it crossed over on the 13th of September, the final drop happened in November. So a couple of months after the 50-week crosses below the 100-week, that's when the final drop happened in the last cycle, in the last bear market. So if that were to happen, that's a couple of months. So if that were to happen here, a couple of months from now would be sort of September 10th, around the 10th of September sort of time, which just so happens to be my birthday. That'd be a nice present, having a massive capitulation on my birthday. So if we go back to the cycle before, we can see the 50-week crossed over the 100-week in February. And once again, that was basically all the gains from the bull market had been given away. We'd already bottomed out at that point, actually, in 2018. And then the cross happened a few months later. It was in the December we bottomed out of 2018. And then the cross happened a few months later in February of 2019. So 2 bear markets ago, we'd already had the bottom by the time these averages cross, or by the time the 50-week crosses below the 100-week. And if we go back even further, back to 2015, where some people listening might not have even been born yet, potentially, if there's any young Bitcoin investors out there. But once again, all the gains had been given back. We'd already bottomed at that point. We had a massive capitulation on the 15th of January 2015, and then the cross happened around April, May of 2015. So almost half a year, like 4 or 5 months later. So if we just do what Bitcoin's done in its history, every time the 50 weeks cross below the 100 week, then we can expect at least a couple of months of sort of chopping around until we either move definitively upward or have a final capitulation first. My base case is probably that we're going to have a final capitulation, because that's what other indicators and history is telling us what's going to happen. If we go over and look at the ROI section, the monthly returns, we can see that on average, July, where we are now, on average is generally pretty good. We've got 9.2% in the green on average every year since Bitcoin has existed. But when we look at the following months, April and September, they're generally the worst performing months in Bitcoin's history. So seeing a final capitulation in the market is just literally what we should expect to see given what Bitcoin has done in the past. So it shouldn't take anyone by surprise. Doesn't mean it has to happen. I mean, as we saw, looking at the moving averages, Bitcoin has already given up pretty much most of the gains it's going to. And in a year's time from now, we're not really going to be quibbling over whether we should have got in at 50k or 60k if the price is up at, over 100. It's not really going to matter. And is it worth taking the risk of trying to wait for that massive capitulation before you lump sum in? Or is it better just to DCA around these levels, because the average sort of entry point that we're going to get is going to be pretty good in 12 months' time regardless? Make your own decision up on that. We can also see the running ROI. And here's another reason why October seems like that's going to be where the ROI has its biggest fall. Because October was where Bitcoin peaked last year. So it's where the biggest difference between the ROI will be in a year's time is likely to be in October, unless Bitcoin goes up quite a lot between now and October to kind of nullify the fact that it was a lot higher in October last year than the other months. Another thing we can look at, if we want to commit properly to the time-based approach, looking at Bitcoin cycles, then we can see literally an indicator here that just counts the days. It averages the days since the cycle peak and from the bottom to the bottom, and then measures just how long it is and then takes an average. And then that predicts or projects the bottom to be, if we look at the last two cycles, which were fairly consistent with one another, that gives you about 370 days from the cycle peak, which leaves us 87 days left from now, which takes us to the 11th of October. The other ways of calculating this, like if we go from the bottom to the bottom, or we go back and include more data points, that predicts the cycle bottom to be approximately the 23rd to the 26th of October. But it's in the ballpark, and I think it's wise to err on the side of being earlier and catching and then paying attention to it when it happens, rather than waiting for a later date and then missing it potentially when it happens. Here's actually a newsletter that Cryptological put out back in August 29th, 2025, before the peak in October, where we talk about the cycle length indicators that the app's showing. And then it had 39 days left, which actually, well, from the halving, which was the most accurate cycle length predictor. The others missed it by about a week or two more. They were a week or two late, but the cycle length from the halving called it to within 1 day. So this showed 0 on October the 7th, and I think the top was on October the 6th. And this was put out in August the 29th. So it's just a nice little indication that maybe we should be paying attention to the cycle length based indicators. And here's a YouTube video that I put out as well that talked about it after it flashed 0. I put it a couple days late, but it's there. No one watched it because it's a new channel and I can't figure out how to do YouTube, so I'm probably sitting there talking to myself. But one must try. During this 100-day window, I tried to do it as like a promotional thing. So within this 100 days, I've made all the premium features of Cryptological free. So people can get as much information, educate themselves as much as they can. Because when I first started getting into crypto, I saw a bunch of sites like Glassnode and Into the Cryptoverse. And I didn't have the money to invest in the market and pay for monthly subscriptions of like $30 to $60 or more a month. So I was like, how hard can it be to build one of these sites that has all these useful indicators on it that you keep seeing these guys use over and over again, but they're behind a paywall? I was like, okay, surely I'll have a crack at building that. And I think I did manage to build one that I can operate way cheaper, which is why I'm offering the normal premium price is about $10 a month, or $13 a month, £10 a month. But at the moment, there's a promotion. until I can not afford to host the site for free anymore, or until the 100-day window runs out. Here's just some examples of some of the charts we've got. The classic Bitcoin price risk metric showing 0.2. Lowest we were at is 0.15 when Bitcoin dropped down to 59k. We had a recent improvement in price, and the risk level's just gone back up to 0.2. But every cycle so far has gone down lower than that, which is just another indication of why a capitulation shouldn't take anyone by surprise if we do get one later in the year, around autumn. We've also got the running ROI risk, which, I mean, you see the previous peaks clear as day, but the last one, because there wasn't a blow off top, we didn't have a massive spike in ROI. It was kind of hanging around. We had the spike, but that was at levels of the previous cycle peak. So where we actually had the peak of the market, the ROI, because we ground up slower rather than having a parabolic top, the ROI didn't really reflect it, just like a lot of other top indicators didn't show. But in terms of bottoms, it's always gone back down to this sort of 0.1 risk level. If we turn on these buy zones, you can see clearly when the 1 year running ROI gets down to this level, that's not necessarily right at the bottom, but it's pretty much there. I mean, on these last two, it is basically calling the bottom and just beforehand. But don't expect it to go back down there now. Because of the nature of the last cycle being a slow grind up, we're not going to see a drop down to that 0.1 level unless we get severe capitulation from where we are now. I mean, we can click on this what if button up here and literally predict what the price may be. So if we go to October and we go a year on from the high, and we actually look at the target ROI, so that's going to be 0.1. So this will calculate what the price of Bitcoin will have to be if we go down to 0.1 a year on from the high. So when it should be easiest to get the lowest ROI, essentially. So getting 0.1 should be easy at this date compared to other dates, because this is when Bitcoin was at its highest. But if we calculate this, we can see that it's predicting a super low price. It's predicting $12,000. And that is just not, it doesn't compute. I can't imagine Bitcoin going down to $12,000. It's got to catch a bid before that. There will be so many people who are wanting to scoop it up, like below 50k. I just can't imagine it. So if we say, like, let's choose a more reasonable number, say 0.3, and what's the price there? So if we go down to a 0.3, which is only 0.09 on this risk scale lower than we are now, then that sees us in the high 30s, $37,000, which still seems way lower than you would be expecting, I think, or a lot of people are expecting Bitcoin to go. So don't expect this ROI chart to get back down here to where the buy signal is at 0.1, because, I mean, as the Bitcoin matures, it takes exponentially more money to move the price quickly, and so it's just a lot harder to do. So some of these indicators, I mean, like the Pi cycle top's another one. I think they've had their day, and they're maybe necessarily not very useful anymore. I even tried to make this useful by taking the ratio of the two moving averages that create the Pi cycle top indicator and showing the rate of change of each decline and then predicting where the top should be. And it should have been around the point, I can't remember what it should have been, but you can see these peaks as it's coming down. If you draw a line between these peaks, it's above where we got to, basically, and especially where we got to near the peak. So I think the Pi cycle top indicator is kind of finished. Maybe the ROI indicator, the 1 year running ROI risk indicator, is finished too. So I think it's going to be a constant battle between trying to figure out how we can still make relevant indicators, which ones are still useful. It does seem to me that the bottoms are more consistent. So if you look at the ratio here, the bottom, so the separation between these two moving averages, appears relatively consistent over time, at least for the last few cycles. But as diminishing volatility, I think we've got a chart for that as well. Historical Bitcoin volatility, you can see that is also declining sort of asymptotically down to a very low number. And that with it is going to mean that the tops aren't so toppy and the bottoms aren't so bottomy. So they're going to basically squeeze together. We're not going to have these dramatic drops that are going to cause us to get back down to these levels that we had in the past as diminishing volatility takes its effect on Bitcoin. But that's all I wanted to talk about today. Is full free access on this site right now. So pop over and have a look. You just need to put an email and a password in, and then you have free access across the whole site as long as this 100-day window promotion remains ongoing, which we've got 87 days left so far. But if people start using it and my costs go up for hosting the site, I'm going to have to cut it short. But that's all I wanted to talk about today. Come over and check out cryptological.app. See if it can help you make better decisions, because that's all it was created to do. Thanks for watching. Take care. Bye-bye.